live here in Dubai at the World Economic Forum Summit on the global agenda. And here I did get the chance to speak with Alliance Trust CEO Katherine Garrett-Cox, or as some in the London media call her, Catherine the Great, for her stock-picking skills. She says the speed of the stock market recovery may be premature, and she doesn't expect to see one until the third quarter of next year. I spoke with her over the weekend at this conference and asked her how she's positioning her portfolio now.
As we redeploy money back into markets, we've been very careful and we've been focusing on, particularly on the Asian area, and we're now starting to look selectively at certain emerging markets.
Where in Asia are you looking to be most engaged?
We're sort of less focused on countries. I mean, yes, we look at countries, but we're much more interested in stocks. And to that end, we're actually looking at technology companies. Obviously, they have to have a unique franchise. They need to have good growth. They need to have strong partners. I mean, Hon Hai, for instance, is a good example of that. They're the biggest supplier to the iPhone and to Apple. But equally, the other way we're playing it is we're investing in UK companies that have good Asian exposure. So, for instance, a bank like Standard Chartered, for instance, that has an extremely competent management team with very proven execution capabilities is a bank we favor. And we also like Prudential, which again, really for the Asian play, what's happening in the insurance cycle out there, again, we believe that that will start to capture the benefits as the economy recovers.
How comfortable are you right now with the insurance sector, with financials, and putting money to work there?
Well, we've been super cautious over the past 18 months. So to that end, actually, we stayed out of trouble quite well. I mean, we didn't own the UK government-owned banks, and that has been a good decision. Yes, indeed. But we've started to put our toe back into the market. And again, on a very selective basis, we're looking for high-quality management with good franchises that we believe can participate in the domestic economic growth of those countries. But certainly, overall as a sector, we're still marginally underweight.
So HSBC is a company you've spoken previously about feeling comfortable in within the financial sector. HSBC, Standard Chartered, are there other financials you like right now?
Those were probably the main ones. I mean, we've started to put our toe back into Barclays, you know, we're also taking a look at some of the Chinese banks as well, some of the Asian plays. So again, it's very much driven by company fundamentals, and where we can find value, that's where we really want to be.
In the U.S. in particular, a lot of the conversation in the public space is about the unemployment level at 10.2%, perhaps underemployment even higher than that. Globally, as we get into the fourth quarter and get closer to Christmas, what is your view on where the consumer is, and would you put money into the retail consumer space?
To be honest, we're very skeptical about consumer stocks, and it's a sector that we've been underweight for a while and we remain underweight. And I think if we have a concern about the global economy, it's just that the consumer is not in great shape. And as you well know, the consumer in the States accounts for over 70% of GDP. It's been a really big factor. And whilst there may be an economic recovery starting to unfold, our view is it's going to be a relatively jobless recovery. So to that end, there are implications for the consumer. It means the outlook for housing, for retailing, for a number of sectors that touch that part of the world and the economy is going to be pretty difficult.
On the currency front, are you putting money to work in what have been fairly volatile Forex markets of late?
Historically, we've only ever hedged currency if we think we expect moves of more than 10%. And the reason for that is it's quite expensive to hedge. And our general view is I think we're great at picking stocks. You know, do I think that we're fantastic currency forecasters? Well, you know, I'm a bit skeptical about people's ability to do that. Having said that, we think that sterling is probably going to remain under pressure because the domestic economy for us just isn't looking great. We think the dollar may recover a little bit, and again, you know, the euro, it sort of depends on the direction of the European economy, which is obviously complicated because it's a big region.